Hey everybody, good afternoon. Doc Severson here with 12 Minute Trading. I'm joined with Dave Lukas over here. And today is Monday, the 9th of June. Welcome aboard, everybody. We have a market which is the bulls are kind of like on a daily basis pushing the bears aside. So a month ago, I think very few people would expect us to see challenging the new highs, but we are literally inches away from that. So V bottom, once again, I mean, this is almost the same thing that we saw back in 2020. So here it is.
Yep.
After the taper tantrum of, what was that, 2018, now we have the tariff
hmm
tantrum of
hmm
2025. Dave, what are you seeing out there, man?
We had the same tantrum last time we did tariffs, right? So it just is, it seems like that pattern's repeating itself. Um, it's like anything, the market always initially overreacts to when things change, then the market gets used to it and it becomes like, okay, we've got it priced in. We know what the tariff situation's like. And there's obviously the taco trade. Trump always chickens out, I think is what they call it. But so maybe there's some of that priced into it. But for the most part, you've got an Atlanta Fed that's saying you're going to have a 4.6% GDP with the tariffs that are in effect and everything. So I think the market's just kind of getting to a point where it's like, all right, fine, whatever, let's just time to make some money. Like I think that's really what we're seeing at this point. So at some point we will have the inevitable, fall back down, from this. And I know you're not one for seasonality that much, but seasonality typically we're at this point we're going to run higher into the summer, run through in July. You get into August, things get dicey as you get into mid-August. Typically corrective into the end of the month, beginning of September. That works itself out by October, and then you run through the end of the year upwards for the fourth quarter. And I think we're just maybe getting into that kind of period of the year where that seasonality takes over. So, um, and the charts show it. If you look at the daily, the weekly, and everything together. In fact, we were talking beforehand. I can share my SPX chart that you and I were talking about. If you want to share that, I can pull that up. So,
Yeah, you're all set.
and then we can do all the ones side by side. Perfect. You got it up there. So if you look at this chart, and forgive me, guys, usually we share on doc screen. So this is just a little bit different than what you're used to seeing. But we've gotten that move off the bottom. We've come all the way up. And we were just talking about, does the upper Bollinger Band matter, right? So we were grinding higher, grinding higher. In fact, we're charging back up on the fly, which is rare to see. One day wonder down, and all of a sudden we're charging back up. And so does this matter that we're near the upper Bollinger Band? And I would say yes if we were exhausted, but we're not exhausted. We have full energy, and now this chart's starting to squeeze. Typically, when you see that setup, you're probably going to break out to the upside. And so if you go to all these other times where you're in the upper Bollinger Band and you're exhausted, well, you're probably going to pull back. Exhausted, pull back. Exhausted, pull back. Like it's, pretty much a given when you're exhausted, and you hit that, you're going to go pull back or go sideways, right? Here's another one, exhausted, sideways, eventually pulled back. But if you're charged up and got a ton of energy, you can keep grinding and going higher from here. And the thing that I think is important is we have a weekly chart that is getting into exhaustion, but it's not there yet. We've had it as low as the 13, right? So we're getting into the zone, but this is a weekly chart. So you can go, up a couple more weeks here. We certainly can take out this high. And I would not be surprised to see us take out this high. And then that's something to think about. We take out this high, this gets into exhaustion. Then you've got a daily chart that most likely to take out that high will bleed its energy a bit in exhaustion. Once you got a weekly chart that's exhausted and a daily chart that's exhausted, that's when I would start to be really cautious. And I will say this, when you get into those scenarios, right, the impetus is like, okay, this thing's going to turn around tomorrow. No, it may take a couple weeks before that finally unfolds. Like it could look like something like this before it finally unfolds, but it typically will unfold when you get that. So that's kind of where we're at. For right now, I think for the short term, it's kind of green light to the upside. Unless something comes in that's not priced in or something crazy happens, and if there's any year that's proven that that's possible, this is that year. But as of now, it does look like we have a continued uptrend in store, and the energy on the daily chart there is supported, and the weekly chart, at least for a few more weeks into July or so. So that's kind of my read when you look at those two charts together right now. So you want to pull up all three together, you can kind of look at the monthly in conjunction with those.
Yeah, this is my look at the rest of the charts here. Let me bring up my magic pen. There's a couple of things that I've seen in this chart which could be kind of exciting for a lot of people. So, first of all, what you do is you look at let's pull everything out here. So what's the trend? I mean, sometimes it's that simple. It's like, what's the trend here? The trend is still on the monthly chart, even though we've had, a sharp pullback, but notice where that pulled back to. That's a swing test. Pretty common to see a swing test in after a strong rally. Swing test shows up, and then this recharges the chart and gets it ready again. So again, the thing I try to use with people is think of this as a fuel gauge. This is full, this is empty. This is typically when we see, notice in 2024, we kept on going for a few months after that. And so the first negative catalyst that comes along of uncertainty causes a big reaction. But then conversely, when you get certainty coming back into the market, this is where the energy comes back in. So we still have an uptrend at this point. Now on the weekly chart, this is what's interesting here because we had a downtrend showing up. And then what we were looking for is, especially around this area, if you go back a couple of weeks or so, when we were talking about this, we thought that this was going to be really tough to get through. And it was not. Actually, it blew right through there. And so that was really where the polarity flipped on this thing. Now, what's happening is everybody's waiting around for the pullback, myself included. And it may be one of these situations where we just don't get one. If we go back to, I don't know if I have enough data on here. Yeah, probably not. If we go back to, let's see, let's go back a few more years. If we go back more than 5 years, if we go back to 10 years, we can see kind of the same thing happening with the COVID thing. Because off the bottom, we were like, oh, the world is ending. And then next thing you know, it's like, no, it's not. So we did have a defined higher low, but it was very shallow. It was very shallow here, and it's kind of the same situation that we have right now. That notice that we had this very shallow pullback, and most people at that time were saying, oh no, that's not enough. We're heading back down again. And so that negativity got unwound to the point where finally we got into this situation where it was just completely on the ground. And so this is where we had back-to-back 10% reactions to the downside. But that led to an amazing string to the upside. So we're kind of right here right now. If we had to call a similar analog, we're kind of at the same place. Now, lastly, the thing I want to bring up here is that this is actually, this is where you get into the subjective area of technical analysis. But this is a inverted head with shoulders pattern. And the upside target of these is the depth of the upside down head pattern, which if you look at this is about 1,000 points. So our upside target from this point forward is about 1,000 points, which puts it up at S&P 7,000. So you didn't hear it here first, but we do have a measured move target of S&P 7,000, which could potentially hit. And, Dave, if some of your projections on inflation as the only way that we can work ourselves out of this mess that we're in right now is hypergrowth, that's what a lot of people are saying, that's the only way out of this is like we can't get Congress to stop spending. So the only thing that we can do is to goose the economy so that we make so much GDP and we pay off some of that stuff. That may be the answer. So
Well, I
S&P
mean, look
7,000,
at
here we
look at
go.
where we're at, notwithstanding the end of the bromance of Elon Musk and
Yeah.
Trump last week. But the long and short of it is, and the reality of it is you look at this bill, and it's $2 trillion deficit as far as the eye can see. It doesn't matter who's in charge. I mean, you know, the thing is, we're going to cut $1.6 trillion. That's what this bill does, right? Well, it doesn't start till 5 years from now. Like, I mean, come on, 5 years from now, who knows who's going to be in charge of Congress or what they'll be spending, right? So it's a one of those gimmicky things to say you've got some savings in there, right? And so we're going to keep the spending's going to keep going. It does have good things for taxes and that stuff in it. And I think we would all agree that keeping our tax rates where they're at is good, and there's maybe some extra little things in there that if they pass, that will help put some money in people's pockets. And I do believe that the people best to do the things with the money in the pocket are the people, not, government in that sense. And so, there's that benefit may spur some growth, right? And so I've always said, and I think I've said this since last year, it's such a delicate balance of like how you have to reduce government and increase growth in the economy, and do that whole balancing act to get to a point where you can cut back $2 trillion a year, right? And I think that's what Elon Musk is angry about the most, is he's used to business speed, or actually in his case, Elon speed, or his favorite movie, uh, uh, what's it called? What's his favorite movie? Spaceballs, ludicrous speed. And he's running into government speed and realizing like he found all this money and everything else, and it's right there for the taking, and none of it's going to happen. And it just, you know, he's somebody who probably is not very happy with that, obviously. So like that's what he's running into. So, and Trump on the other side, for what it's worth, I think learned in his first term what that means and what that is. So he's taking what he can get with this bill, and then maybe they'll come back and take some other bites of the apple. But the MO for just no matter who's in charge or what this has been is to continue spending money, spending more than we have, racking up those deficits. That causes inflation. The dollar continues to lose value, assets go up in value, and so on. So, that's just the reality of it. And I think your thousand point target, well, I don't think we're going to see that this year. I think the march towards it certainly could, start this year. I think we're going to go through into the next month. These charts are going to get exhausted. We're going to go nowhere for several weeks. August is going to be, whatever, right? Because we're going to get that bill passed at some point in time between July and August. So then we'll know what it is, right? So maybe you have some sell the news on that, get that volatility, work through that. And then I think fourth quarter is going to be really good. So,
Oh, by the way, I want to bring this up. This is another of my favorite charts, which is our friend Bitcoin. So after
mhm.
hitting a recent high of about 112, we had a little, and I wonder why. I wonder why we had a little corrective move here. If you go out to the weekly chart, well, guess what? We're in exhaustion on the weekly chart.
Mhm.
So no surprise, and it's doing exactly what it needs to do. Actually, what I would prefer to see is another week or two of shake and bake. You got to get people to give up on this. That's the only way you can get markets to go higher, is take one step back and take several steps forward. I mean, that's what all of these moves have been so far. And this really charts very well. Bitcoin charts very, very well. And by the way, a lot of what we're doing here is in 12-minute trading is we're just using the IBIT, which
Mhm.
is an ETF, which is by the evil dark star BlackRock, but it it's got very liquid options. So it was funny. There's a lot of people complaining about how BlackRock was not the first to get the ETF listed for Bitcoin, but they kind of pushed their way to the front of the pile, and they got first mover advantage on this thing. So, all right, we got a question coming
Yeah.
in. I encourage you guys to ask questions, whether or not you're watching this live or if you're getting this in the next couple of days on a
Mhm.
replay. send us your questions and we'll cover it next time on the live session.
Yeah. So
Chalupa
fractal
Man, from a
perspective.
fractal perspective, is a chart being exhausted on the 14-day more of a green light to sell calls or puts than it used to be now that you primarily use the 10-day?
Well, there's a number of variables in that, right? So I switch between the 14-day and the 9-day, and still I think the 9-day is the better of the two. But it also depends on which way the chart is going, right? So and where the price is at. So for example, exhausted on the lower Bollinger Band, probably done with the move to the short term to the downside. Exhausted on the upper Bollinger Band, probably done with the move to the upside. Fully charged on the bottom Bollinger Band, ready to trend back the other way. Fully charged on the upper Bollinger Band, that's the hardest one to decipher. You have to let that move play out when you see that. Because like I just showed earlier, this thing can continue grinding higher and go through and use that energy to go higher, or it could turn around and have a nice jump back down. That's just the hardest scenario. The best scenario with the energies that I'm most confident in selling put side or put spread side into is that lower Bollinger Band, either exhausted or fully charged. Because if it's dropped that much to get down there, and it's either exhausted, it's done, or it's charged itself up and it's ready to go the other way. That is probably the most definitive signal that I look for, and that's what I sell like my longer term trades into. I really look for that, and I've actually, for those of you that are with me, during this, so I didn't have to deal with the noise. I switched to that and just doing the longer term trades. And man, those things have just been super steady and consistent. And using that one signal, for me, that's one of the best ones. So
Okay,
Doc, I don't know
so
about you.
there's 2 points that I want to bring up to Chalupa Man to kind of augment what Dave brought up. So first of all is the question of 14 versus, and currently we're using 9. So if you look at all these speeds down here, they're 9, 9, 9. Okay. So which one is better, 14 or 9? Well, there is no answer to that. Really, what there is which speed matches what the market that you're watching is doing. Because quite honestly, what we found, and I traded this way on 14 for years, and then what I found was back here in the bear market of 2022 is when I was running at 14, we would have these awful moves to the downside. I mean, these are about as linear and nasty as you can imagine. And what was happening was that the energy got down to about here and no lower, and then we'd start to see the opposite move. So that was the clue to me that something was wrong, that I was misaligned on 14, because 14 was quite honestly just too slow. The market was faster. The price action was moving faster than a 14 sample could pick up. And this is where I had to go down to 9. And I've stayed on 9 because if you look at this, you can see that things have changed. Things are just faster now than they used to be. This was when I was using 14. All of this was 14 and it worked perfectly. But now the market, for various different reasons, is just working. So that's the first answer to what I want to bring up to you is that.
Well, to add to that, my thesis for that and why that's happened is because of daily options. Back when we were doing 14, we started using 14 when there was only one option cycle monthly. Now we have daily options, and that moves more.
It could be a lot of different things. It could be, certainly the ZERP had something to do with it as well too.
Yeah.
But yeah, I don't disagree that it could have something to do with daily options. But here's the second part of this, and this is again to amplify what Dave just brought up, is what I used to find was a lot of people would get destroyed because they would say, they'd see some random pattern or something like that, and especially on the overbought stuff, So we would look at something like Zeroscape on, let me just bring this up in the and something more traditional. So we'd look at this and we'd say, well, this can't keep going higher because it's at the upper Bollinger Band. Well, guess what? The price doesn't care what is on your screen. That was the one thing I had to learn was, that I would see something happening and it depends on which way the trend is. So clearly the trend is to the upside. So your less favorable signals are on the upside direction. So whether that's exhaustion, whether that's overbought, market doesn't care about overbought. However, what it does care about is in the opposite direction. When you can go in the opposite direction, these signals on the bottom side. So from Dave's perspective, like the lower Bollinger Band, if you're exhausted on the lower Bollinger Band in the context of an uptrend, then this is the signal that you want to look for. That's the good one. The bad ones are when we have the price going in the direction of the trend and you start getting bearish on something and you just get rolled over and over and over again. And I've seen this happen for the past 20 years with the general trend that we have is, people get focused on overbought and they get bearish and they get rolled. And next thing you know, people are complaining about, well, this market's rigged. The market makers hate me, and they're pointing in all kinds of different directions. But basically, what you're doing is on something like that, you're going against the trend. So I don't know if that answered your question. That probably brought up a whole lot more than you asked in there.
More questions.
Yeah, but that's kind of it. It's two parts. So first of all, it's timing the speed to it, and then the second part is the direction. Which direction do you care about? You don't really care about the upside direction because you're not looking for a reversal in there. So an exhaustion figure in the face of a super trend like that, good luck. Yeah. Don't stand in front of the freight train going, stop, I order you to stop. That's essentially what you're doing if you've got a bearish trade on Zeroscape right now.
Yeah, and that's the thing, guys. I think the other hard thing for people too, if you're a really great trader, you will understand like the setup that I outlined with the lower Bollinger Band, either exhausted or fully charged, and you would be extremely patient to get those on either individual equities or indexes. And then when it triggers, you would go in and go in probably pretty big, right? And you may get, a certain amount of those opportunities a year, especially on the indexes, you know? And that, especially like another, like a really great one is like weekly Bollinger Band into exhaustion in a normal, if you're in a quiet and trending uptrend, not like where, 150% tariffs are going on tomorrow. That's a different world, right? But if we're back to quiet and trending, which Doc and I think we are getting back into that quiet and trending market, and we get to this weekly exhaustion, and the market pulls back to like let's just say the moving average on the weekly chart, which would be good support, right? And that's where you see it get charged back up, and it's there. That's one of those few times a year you go in and you can make all the money you want on those setup, but you have to be extremely patient. And that's hard for people to do, right? You're sitting there with money that's not being put to work. So it's like, oh, I got to do something. I got to put it to work. And that's a hard thing. And even for us, like running a service, right? We have our clients demand, us to, find opportunities and stuff. And sometimes they're just not there. And that's one thing I think we do a good job of just saying, hey, look, it's not here. We're not going to trade today. We're not going to trade this week. And that's something very important that I think everyone has to learn as a investor and a trader in this space, because if you do, you'll be much more profitable over time. Let's put it that way, right? So it's a hard skill to acquire is patience.
It's something it took me a long time to really acquire that, and because at the very beginning I was so excited. You see literally everything moving everywhere, and you just want to jump on everything. And then what happens is you end up getting slapped around. And
Mhm.
then you think that it's some other problem, or oh, if I just added this one other indicator, which
Yep.
you're into the squiggle trader syndrome, and then you find out that that isn't it either. And then what you find out really is it's more about you determining, we're really making a pact with yourself that you are going to go against the herd. You
Mhm.
are going to take the opposite path. You're going to think independently. And so once I got to that point, once I started coming up with my own systems and my own view on what the market was doing and not just running along with everybody else, that's when
Mhm.
things really turned around and started working well, because all of a sudden I stopped listening to the news. I stopped just, randomly FOMO jumping onto things and trying to make something out of it. Sometimes it works, but most of the time it did not, or I'd
Yeah.
get on near the very top. And so you have to temper that. And it took longer than I would like to admit to kind of work out of that type of mode.
Yeah, it's not easy. I mean, our whole entire world is built on instantness. I've often joked we stop the microwave with 5 seconds left. We can't even wait 5 seconds anymore, and so that's the hard thing with, having a pile of money, no matter how big or small it is, sitting there. The impetus to trade is just always there, and so keeping it at bay is tough.
I want to
So,
bring
but
up
if you can,
one quick one here.
yeah,
Sorry, Dave.
that's all right. Go for it.
If there's no other questions, we're going to wrap here in just a minute here, unless you guys have any other questions. So I do want to bring up to the fact that now gold got into one of these situations where just everybody running into it, and I was uncomfortable with how everybody was talking about gold, and so this is where I took half of my position off. But now what's happened here is that on the weekly chart, it's almost, and on the daily chart, it's almost ready to go again. And
I
this is a
know.
very, very common consolidation pattern. What I'm hoping is that we get one more trip to the basement here. I'm hoping that we get one more trip to the basement. And why would that need to happen? It's because of this guy over here. The monthly chart is in kind of a bad shape, but if you look at what's been going on, the monthly chart will get into this condition where it gets into utter and total exhaustion, and then it just kind of goes sideways for a couple of months, and
Yep.
just enough to get it going. And then it does it again, and it goes sideways just for long enough to get it recharged again. And so what I'm hoping is that we get just one more red candle here, and then this will get the energy back up into this area, and we're probably going to be ready to go to 400 or something like that. So this would be good. I definitely want to be selling puts if I can get something down in this area for GLD.
Yeah, that'll be coming too on I once this bill passes, if it's gonna be $2 trillion deficits, and it looks like that's gonna continue, that be a catalyst for gold to get moving again. Not that it
Yes.
isn't already.
So if we look out maybe 46 days or something like that, right now what did I say? The 280 is probably about as far down as you're going to get it. The 280 right
Yeah.
now, what?
260 is the best point if you could really get it, but that's
Yeah,
tough.
280 right now is just not paying dog squeeze.
Hmm.
So, and that's even at 46 days. The volatility is not really particularly high on GLD. So what you need is you need something to get things spicy again. You need some type of a
Yeah.
downdraft. But you know, here's a good example. Like even though I'm seeing this setup, I will not chase the breakout from this. I will not chase the breakout. Just because it's too expensive and it may, you can be wrong for a long period of time on gold. So you've got to put yourself against the crowd, and the crowd's going to freak out if the price drops in here,
Yeah.
and I will step in front of it.
Yeah. That's a great point. Put up silver right now too. Is silver finally gonna catch up? So,
Boy, look at that
uh
go! Goodness gracious!
is it silver's chance? Is silver finally breaking out to catch up? I think it's kind of exhausted right now, though, from this move. So look for same thing, kind of pull back in silver, and then there may be that chance, maybe back down to 30 there or something like
See, this
that.
this is what's overriding just about everything right now
Hmm.
is this monthly energy is enormous. It's been doing all the heavy lifting here while gold's
Yeah.
been getting all the glory. And
Hmm.
so, yeah, you're going to run into little exhaustion periods from time to time, but like here and here.
Hmm.
But right now, this is going to keep on trucking, and I would expect this to.
Yeah.
Eventually, what you're going to see with this one is just like what you saw with gold. This is going to be a rounded base, setting
Yep.
up
Big cup with handle.
with a great big handle that's just going to last for a year. So getting up to 50 would be a good place to take profits for the meantime, and then maybe see if there's a way that you can, re-enter at a cheaper price or something like that. But,
Yeah.
so, well, anyway, thanks everybody for joining us here today and asking questions and being part of a growing community here. And we'll look forward to talking with you guys next week. And next week's
Awesome,
session,
guys.
something will be happening within the next 7 days, I
We
guarantee
got
you.
inflation data. We'll see if that matters anymore this week. We'll
Yeah,
find out.
that's a good point.
So,
Thanks, everybody. You guys take care
thanks,
now.
guys.